Hello, welcome back to a new video. Hope you're having a good trading day so far. Today I want to talk about a different type of reversal setup, a break and retest pattern that you can see across markets and different time frames. And it is often very obvious before it happens. And I want to show you what to look for in such a market and for such a pattern. So as you know, we always use the 20 SMA here in our trading. It is the black big line here. You can use it across all different time frames and it works equally well. And then we look for such a flag pattern, a market where we are moving down. We can usually draw a nice trend line once we see such a market. So by connecting the highs and the lows, we can get an idea for the market structure. You can see here in this period, price made lower highs, lower lows as well. And then suddenly here, price then shot up. And before price shot up, we can see very nicely that price broke above the 20 SMA. We retested it as support. And then we started to rally. And you can play this in many different ways. So you could either look for the latest swing high before the retest, which was this candle here. And then once this candle is broken, you can initiate a long entry, or you can look for the swing high before that, which is here. This is then a safer method of entry because you are looking for additional clues for a change in trend direction. And so what we look for is always a trending market where we can draw a trend line. Then we look for the break and the retest of the 20 SMA, and then a break of the trend line, a break of the swing highs here, and then we can write the trade and the trend by pulling our stop loss behind the 20 SMA, and take profits can be taken by using previous swing highs and lows, or you just move your stop along the 20 SMA and wait until you get stopped out. And this is a pattern that reoccurs over and over again. So we look for this trend structure here, which is very similar to what we do in our reversal trading. We look for an established trend. So in this case here, we have a downtrend, lower lows and lower highs here all the way until something changes here at the bottom. You can see price is made a lower low, and then suddenly a higher low. This could have been our first entry based on our regular reversal trading method, but if you are not comfortable with it because this 20 SMA has been broken previously and then price did not generate a long signal, you could wait until you get this break and retest pattern, which happened here. You can see price move back into this trend line. This trend line was very well respected. At this point, it looked like it's going to hold, and then price sold off back into the 20 SMA, but the 20 SMA did not break. We had a breaker, we had a successful retest, and then price shot above this trend line and above this support and resistance area as well. So in this case, you can see the last two swing highs fall in the same price level. So you can see here the first swing high, the second swing high, and then price broke it and we traded higher from here on. And this is again a very clear break and retest pattern. When we go forward, we can see this over and over again. In this case, it was not as clear. We had some type of a trending market, not a strong trend. And then although we were able to draw some type of trend line here, the trend line was not very clear. You had violations. Yet price did not quite make it. This could have been a first retest here, as you saw, this one as well, but price never really broke above the trend line and also not broke above the previous highs, whereas here we had some type of retest. Then we use our support resistance tool, and you can see here price retested the 20 SMA here, and then we shot higher and traded above the 20 SMA. Another safer entry would have been here after this high was broken. So you can see here, swing high here, where it coincided with the trend line, broke above it, came back, retested it, and then shot higher once again. And then here at the bottom of this pattern, you can see here, we drew a nice trend line here. This looks like a long head and shoulders pattern where you have swing low, swing low, swing low, then price failed to make a new swing low. It made a higher low. Then price came here into this moving average. It broke higher, came back, retested the 20 SMA, and then shot higher. You can see we broke all the previous swing highs. This swing high is the major swing high, and then price kept on trading and trending higher. Another example here, very nice. The same pattern is again presented here. You can see price been this downtrend. Then we made this bottom pattern here. Price broke above the 20 SMA. It came back, retested the 20 SMA here with this pin bar. With this candle, it successfully stayed above the 20 SMA and then shot higher, broke above the highs here. And then we had a nice trade and a nice trend. And now we are here on the Euro Japanese yen. This pattern also works on Forex, and you can see it happening right now here. We can draw a trend line here, although the trend line has not been broken yet, but there is another early signal which we can use. So you can see we had an inner trend line here where we connected the highs here, highs here. It retested the trend line here as support. It came back into the 20 SMA. It found resistance here, and then it started to sell off. Price is now coming back into it, but as I said before, we don't enter until the last swing low or swing high has been broken. So once price breaks below this area, we will enter a short trade and then ride the transition to the downside. Here is a very similar pattern that we traded a while back. So you can see when we draw the trend line here, it is too steep to draw a good trend line, but you get the idea. So we had this uptrend here, price found resistance in this area, we sold off, broke the 20 SMA, we did not make a new low initially, we came back into the 20 SMA, and then we sold off into our downtrend. And you can see here again, very nice break and retest of the 20 SMA is repeating itself over and over again in such scenarios. Of course, it does not work always. So you can see here, price has been in this downtrend. We broke the 20 SMA, we retested it, but then we just drifted sideways. But at the same time, we never broke the previous swing high. And this means that we would not have entered such a trade. You can see here is the retest, price stayed above it, and we would only enter long if price breaks the previous swing high. So this is an example where price did not make a successful retest, and we did not get a trade entry because price stayed below this area. And this is basically the pattern that I wanted to highlight today. I really recommend that you start using the 20 SMA on your charts. It's a great tool, and there's nothing special about the 20 SMA overall. It is just a great filter tool. It can keep you out of a lot of problematic trades, and it is something that I have seen make a big impact in many traders' performance. So I highly recommend that you use the 20 SMA, give it a try, and I have also another video about this tool that I will link in the description below.